It's Thursday, October 14th, 2021, and today we're talking about Tiger Global pounces on ResQ, Rose Rocket drives into a new round, FreshBooks and Paystone use their funds just like they said they would, and in our lightning round, IPOs for Q4 and D2L, CostCertified raises $8.5 million, and Alida is alive with a new raise. Let's get started. First, Tiger Global pounces on ResQ with a new $39 million USD round. Tell me about this raise, Alex.
Hey, Jason. ResQ, who's Toronto-based, raised $39 million, co-led by Tiger Global and Canvas Ventures. They had a lot of participants in this round, so give me a second. So they had the previous investors, Homebrew, Inovia Capital, Golden Ventures, and many new angels to the company. Tony Xu and Stanley Tang, founders of DoorDash, Bastian Lehman, founder of Postmates, and Max Mullen, founder of Instacart, and a few others. So very big round, a lot of participants. And interestingly, this just comes like, I think 6 or 7 months after announcing a 7.5 million USD round.
And a lot of those participants are industry specific knowledge, right?
Yeah, they're all something around food.
So tell us a little bit more about what ResQ does.
So have you ever been to a QSR restaurant? Do you know what a QSR restaurant is?
Alex, my diet is all quick service all the time.
So for people that know what quick service restaurants are, those are Tim Hortons, Pizza. What ResQ does is make it easier for them to operate the the operations. So they provide basically marketplace and workflow software to repair the equipment in restaurants. They connect restaurants to contractors, and they then provide communications, they verify the job's being done, and they pay bills. And this is especially useful for large franchises. These are companies that own 10, 15, 20 locations. And ResQ claims that they save these customers up to 20% of the annual operating costs.
So has this been a good period of growth for ResQ or a difficult period? Because obviously the restaurant industry has faced a lot of headwinds over the last 18 months.
So it's been a good 4 months for ResQ, or since the last financing. So again, they don't provide absolute numbers. There's nothing about how they've done over the last 2 years.
Mm-hmm.
What I could find was they serve roughly 4,000 locations, which seems like a big number. And over the last 4 months, as the economy's reopened, they've expanded a lot. They've gone from serving restaurants in 7 states to 36 states, and they've grown their contractor base, so the supply side of their marketplace, by 400%.
Wow.
The other thing is they now look like they continue to grow because they have roughly 80 employees, and they say they want to grow that by 400%. So that gets you to about 300.
It probably also, of the last 4 months, hopefully there's been a lot of pipeline movement because, like you said, this is great for large enterprises or ones that have hundreds or thousands of locations. So you can imagine 1 or 2 of the right logos in the pipeline coming through is going to really juice that 4,000 location number.
Yeah, well, I think if your customers have, if you're a big franchisee, or you could have 300 locations, right? And the reason this is a very valuable product for you versus someone that has 1 or 2 is this gives you almost information on how each of those franchises are operating and benchmarks against others, right? So all of a sudden you start seeing one keeps on having their plumbing break every 3 months versus the average of every 18 months. There might be additional insight. So I think not only the pain of getting contractors and serving the back of office is interesting, but now you've got some metrics on operational efficiency of each of your locations.
I love that. And why is the TechTO community paying attention to this deal?
So I think we can look at this financing and see a few interesting trends. First, like you alluded to, the most interesting thing and the part that's getting the least attention in press is the angels in this round. So you have angels that have loose connections to food and QSR, founders of DoorDash, founders of Postmates. They've sold to this industry. Instacart doesn't sell, but is around food. I believe the reason to get these angel investors involved is that they're strategic. They can help introduce the company to new distribution channels. So, hey, maybe DoorDash starts offering some of the largest partners the ResQ service.
Sure.
Or if they can't do that, they can introduce some customers. So very strategic investors, which is very interesting.
And are you seeing this as a trend? Are you seeing more companies raise from strategic individuals or angels in later rounds versus just from one or two VC firms?
I think that's a trend we've seen a lot in the Valley over the last 24 months. We're starting to see it creep up in Canadian deals. I think it was conventional last week that had only angels
Right.
in the round, right? So it's something I think founders that are raising from Valley VCs are thinking, and I think it's being a bit consulted by those VCs and saying, "Hey, we can introduce you to these people," and also
Mhm.
the mindset of someone that's going to the Valley is like saying, "Hey, this is a trend. We should also jump on this trend."
Right.
The
Okay,
second,
why else are you paying attention to this?
second of all, this is a momentum play. Like, you know, um, and this market for mid to late stage investments seems to be dominated by momentum. Um,
Mhm.
what I mean here is some key metric you're telling your investors, and it's growing really fast. You know, look at this press release and numbers around ResQ. They didn't tell you any absolute numbers, so I don't know what the valuation is versus revenue versus run rate, but they did say, hey, we've basically quadrupled our geographic reach and our supply side in the last 4 months. Extreme growth, and VCs are paying for momentum. This is driven by
Right.
Tiger, by Coatue, by SoftBank. And I think if you have the momentum, if you can make the momentum and leverage it, great. But it's a dangerous play. So again, don't have any insights here, but assuming ResQ is valued at roughly $200 million, and it's assuming it's a healthy revenue multiple, any
Uh-huh.
deceleration of growth may prove to be fatal. So what I mean here is like right now they're growing at growing 4 times in the last 100% a month basically, and
Right.
then you go down to 30% growth over a 6 month period.
Yeah, also
And
indicates good storytelling from the founder, Koljiv, that, he was able to say, here are the numbers that we're going to focus on. And then if 4 months later, those numbers are 400%, it's a much easier to go back
yeah,
to the company and say, hey, I said what I was going to do, and those are the right numbers, and we did it. Versus having to say, actually, those numbers didn't work, but look at these new numbers that are emerging.
look at the number of franchises we have now under, yeah, but like yeah,
Cumulative, that's
but
who
like
have used it.
yeah, but if you can get momentum, you can raise at high values
But it's a high risk, high
valuations. It's a high
reward.
risk.
Yeah,
Yeah, and
absolutely.
then like look, Tigers entered Canada. Like, um, you know, Tiger entered VC about a few years ago and changed the game in the States, and they
Mhm.
haven't been that active in Canada. I'm pretty confident I know of deals they've done in Montreal and Vancouver, and I'm hearing them looking at a bunch of other deals in Canada. So what the implication here is, this changes the game for late stage VC in this country.
Mm.
Uh, they're looking at IRR. They're willing to pay up for growth. They're a bit less price sensitive to valuations later stage. It'll be interesting to see how this plays out with companies like A rounds and B rounds across the country.
Yeah, I think more capital is good, and I don't think we care too much about where it comes from, especially in the later rounds. Getting some international insight and exposure and connections can be great for
Oh
some
well,
scaling Canadian companies.
I think a few of the larger, well-renowned founders would
Hmm.
argue that it's better to have Canadian capital going to Canadian companies because the money returns to Canada. But like, hey, then we have to pay up.
Sure, and you know what? Hopefully, more Canadian capital just keeps investing in all the rounds, and the ones who participate in the earlier rounds, well, they'll get some outsized returns no matter who invests in the later rounds, which
And
would be
then,
great.
one other thing I'd note here: COVID is no longer an acceptable excuse for your company's slow growth.
Hmm.
If anything, there seems to be a reopening trade, and lots of companies are benefiting from it. So
Yeah,
you've got ResQ here in the States. You had Toast Go Public had great growth. They were serving restaurants. Trip Action, who serves the travel industry, just raised its $7 billion in dollar industry.
yeah.
Um, I don't know, again, don't know what these numbers compare to pre-COVID, but the companies, as the economy emerges, if you're serving that industry, you should be growing extremely fast. And the last thing I'll say here from a founder's perspective is industry changes can be tailwind and headwinds for your business. So look at what's going on with ResQ. If you know anything about QSR industry, they are short staffed everywhere. So hey, you have a marketplace that provides talent, and access to contractors that can help you keep your restaurant running. ResQ offers more benefits than ever. But the flip side is now ResQ actually has to go find those people and put them in a marketplace to deliver them, or else they won't be able to deliver the promise to customers and won't continue to growth.
That's okay. They got the access to the entire Instacart base now with Max.
Yeah, but do those people know how to repair your grill?
They will be able to soon. And hey, if you love keeping up to date on how companies like ResQ and the leaders like ResQ CEO and founder Kuljeev are shaping the Canadian tech scene, you need to subscribe to the TechTO newsletter. Alex, what can subscribers expect in tomorrow's edition of the newsletter?
I'm trying to get a profile of an angel for tomorrow. We'll see if it comes through, but we're trying to we're trying to start highlighting people that can write you those checks into our Friday's
Interesting.
newsletters.
But it's not confirmed yet. It's going to come down to the wire.
Yep. Let's see if the team kills me or not.
Okay, I love it. Next up, Rose Rocket drives into a $25 million US round. Who did they raise from here, Alex?
Rose Rocket has a bit smaller list of investors. Addition Capital and Shine Capital are ones named in the press releases and the news.
And what does Rose Rocket do?
So Rose Rocket competes in an industry called transportation management software. Sounds very exciting. I know that's what you woke up thinking about this morning, Jason, but it's actually extremely interesting. When you get freight shipped from point A to point B, historically there's many parties involved. Someone may ship it from the factory to a distribution center, then a distribution center to another distribution center. It could be a second party, and then a third party could do the last mile delivery. There could be brokers involved, and this workflow and this tracking of all this information has historically been done analog, pen and paper, Excel, maybe email. And what Rose Rocket does is provide the tools to basically centralize the process, to make planning easier, dispatching easier, give you real-time shipment visibility. So if everyone on the chain is using Rose Rocket, you can see that the first person handed off the second person where they are, and it makes invoicing and billing easier. So it really automates and provides a communication platform for
I
the
feel like
trucking
we've seen this
industry.
a few times, which is sort of picking a niche or a vertical and then bringing everyone together onto a single platform deep into that vertical.
Well, it's a good play, and like what this has is network effects, right?
Mhm.
So, and like again, not economies of scale, not virality, but network effects. Because let's go back to that example. Let's say you have 4 different truckers and 2 brokers involved in a shipment. If only 2 are using the software, you lose transparency and billing slows down. But if everyone uses it, everyone gets paid faster. There's more transparency. It's a better end user experience.
Yeah.
So there's pressure for people to get on this platform.
Yeah, I remember we had a very similar conversation. We were talking with the founders of Rapbook in the media and entertainment industry about bringing all the actors and contractors on a shoot onto the platform. Very cool. And now tell us a little bit about the growth that Rose Rocket has seen. Have they disclosed anything around where they've been and where they're going?
So they had to one up ResQ, and they, basically their customers and deal volume grew by 9 times over the past year.
Oh, that's a longer time frame though. They did 4x in 4 months.
Yeah, but the reference point, and again, no absolute numbers available anywhere I could find.
Got it. And so why is this interesting to Canadian entrepreneurs?
Again, notice a trend here, very similar to the last bit we analyzed. Little details on actual revenues or customer numbers. Focus on growth. Top tier US VC firm is leading around, and what's slightly, it's a vertical specific play. ResQ's vertical QSR. This is to the trucking industry. So you're seeing a pattern here, what VCs are looking for in US VCs. I'd say the big difference here is there is a strong network effect. You could argue there might be a network effect in ResQ, but this one is a very clear network effect. So I love this is a company that could pick the vertical that was not sexy, not loved by people, took their time to get some momentum. They've been around since 2015, but you're seeing the compounding effect of serving your customers and having a network effect. And so, they now can hypothetically grow exponentially like this without much real competition.
Yeah, so you think they're going to keep trucking on?
Oh, God, yes.
All right, let's talk about some live events, Alex. On Monday, October 18th, that is just 4 days away. We are going to see you in real life for a safe, fun, and exciting patio dinner at Toronto's favorite container destination, Stacked. Tickets include food and a drink, and we're going to get to hear from special guests. We did one of these patio dinners in August, and it was so much fun. And the weather is calling for very August-like conditions on Monday, October 18th, which is exciting. If you're in Toronto, you've been experiencing that all week long. Tickets are extremely limited, so you want to get yours today at techto.org. And Alex, I know you're going to be missing out on that one.
Yeah.
But on Wednesday, October 20th, just 6 days away, Alex is heading out west to join William Johnson and our Tech Together Vancouver family for the first time in almost 2 years. We're going to be back at the Roundhouse Theater, and there are going to be tons of special guests. Who are you looking forward to chatting with there, Alex?
Well, I'm looking forward to talking to Sohaib. I think Sohaib from Rails. Rails was founded hypothetically in Toronto. Sohaib just recently moved out to BC. So I think it'll be interesting story to talk about. I don't think many people know about him or the company, but they're probably one of the hottest, most in demand companies in this country.
Amazing. And there's no hotter place in this country right now than Vancouver. So that's to be the hottest is hot, hot, hot there. You got to learn more and RSVP at techto.org. Next, FreshBooks and Paystone use their funds just like they said they would. Alex, what did they say they would do?
Well, both of them raise money to grow through acquisition.
And what did they do?
So FreshBooks acquired German-based Fastbill, and Paystone acquired Vancouver-based Nice Job.
And why are we talking about these two acquisitions together?
Well, besides the fact that all four companies have two nouns compounded, you know, it's because both, like, if you go back, we covered both the rounds earlier this year. Paystone raised $100 million and FreshBooks raised 130 million USD. They explicitly said this was the grow via acquisition, and they're not doing it. And this doesn't sound hard, but this is impressive. Growing through acquisition is a very different muscle and approach to growing a business than organically or via paid acquisition. So you have to build a team that you have to build several teams actually. One to process and identify targets, another to negotiate acquisitions, and then usually one to make the post integration work. Very few teams have done this, companies have done this successfully at scale. In fact, when I was thinking about the only one I can think of that's done it for many years on a row is Cisco since like late 90s. They're great at identifying up and coming threats or adjacent markets, buying the companies, making them work after post acquisition. And again, even them, they get like only like 80% right. So very exciting to see two companies that said they're going to grow this way to actually make their acquisitions.
Very cool. So we should also talk about these acquisitions. Tell me about the company that FreshBooks bought, Fastbill.
So Fastbill is about 10 years old. It's based in Frankfurt, Germany. Has customers in 16 European countries. And its product is SMB cloud-based financing management platform. So, something similar to, FreshBooks or Xero, targeting the European market. From what I could see, Fastbill appears to be a leading company in the space in Germany. And basically what FreshBooks gets is a nice beachhead to expand within the European market.
Very cool. And tell me about the one that Paystone bought, Nice Job.
Nice Job is actually its fifth acquisition today, because if I don't know if you remember, the Paystone acquisition came after basically merged several entities together. Nice Job gives is based in Vancouver. It has 30,000 small medium-sized businesses, and what I could tell is they have new products and technologies that Paystone was excited to acquire that would complement its current software. And as of 2020, Nice Job had bootstrapped with 3 million ARR.
Nice. Nice job. Nice job. And why are you excited about these announcements?
Well, I think this reflects what doesn't get talked about a lot in this ecosystem. At certain times, just these certain ideas come to founders across the globe. So you see many startups pop up in Toronto. Usually it's a few in each region. Hey, there's a few in Toronto, there's a couple in Vancouver, there's some in Berlin.
Mm-hmm.
They all get a bit of financing. They're all taking advantage of some technology change or behavioral change. And they all do okay, but don't necessarily get exponential growth or venture scale. So what happens in these industry, they eventually consolidate. And then if you're a founder or a team that sees that this is going to be an industry that consolidates, you have to decide if you're going to be a hunter or a prey. And if you're going to be the prey, you want to be one of the early ones to get consolidated by the right consolidator. So you have to pick the one that you think is going to win. You can usually get a bigger chunk of the company and ride that, basically ride that train. The flip side is if you want to be the hunter, you have to then build the skills to execute because of different skills, and you have to convince people to give you a lot of capital. Mm-hmm. It's very difficult. It's a pure execution play. It takes years, but it could be very rewarding in different ways. So, as we see trends come and you wonder how all these companies are going to survive in a space. Sometimes one goes and dominates, everyone else stops existing, but in lots of other times you see these consolidation plays come 5-6 years after the change happens.
I like it. What do you want to be, Alex? Prey or the hunter?
I don't want to be in the industry with the hunter or prey. I just want to dominate. Like I want to be, network effect that just gives me 95% market share.
Alex's theory of natural selection here at play in startup world. If you want to join a community of hunters and prey, Canadian tech founders, entrepreneurs, and investors, you got to come check out the TechTO.org Insider Membership Program. Alex and I are there every single day answering questions, making connections, and just helping grow the community. Alex, who have you been hanging out with in the Insider program recently?
Robbie Bent, from Inward.
Yep.
He says he's gonna host our whole team at one of his locations. We're gonna learn how to breathe better.
Yeah, I have it on the calendar. I can't wait.
Excellent.
I think you've talked about that one before. All right, and now our lightning round. Are you ready for a lightning round?
I can handle it.
We're going to go through 3 headlines. Quick. The first one, IPOs for Q4 and D2L. What's going on here, Alex?
So Toronto-based, Q4 had said they were going to go public before. They said they're going to not do it. Now they're back going public. They're planning on raising $150 million. Kitchener-Waterloo-based e-learning software company DTL has also filed to go public on the TSX. So more publicly traded Canadian companies on the TSX.
So earlier this year here on Quick Takes, me and you were speculating on the reason that Q4 pulled their IPO. How far off were we?
Quite far off. It's a reason I've never heard someone pull their IPO before. They were negotiating with one of their customers, and I guess it was a significant contract.
Mm-hmm.
So basically this partner decided that, for a new product, decided they wanted to renegotiate just after they filed for an IPO. I don't know if that was a strategy on our behalf, but the executive team at Q4 said they didn't want to be distracted. They want to get that solved before they went public.
Wow. Great move on Broadridge's part to pull that one out right after they announce it. And so what do you think it means, the 2 announcements of 2 more companies joining the TSX?
Well, not new insight here. I've said this before. When companies are going public, that means public markets are valuing companies better than private markets. The funding environment's good. And generally, hey, there's more people with richly priced shares that can go acquire companies. So more exits, more capital being recycled. Just generally good news for the ecosystem.
Love it. Next up, CostCertified raises $8.5 million US. Tell me about this raise.
CostCertified is Calgary based. They went through YC. They raised $8.5 million from Fuse, YC, a bunch of other investors, and including a bunch of angels in the construction industry. What's interesting here is CostCertified enables dynamic digital repricing of renovation projects. So let's say it gives you an interface to say, hey, if I want to do this to my room or put this type of flooring in, it reprices the whole project. So I don't know if you've ever done a renovation. I think you're about to do one. This sounds like a very cool tool because otherwise you have no way to budget it.
Does it? Yeah, no kidding. Can it just make the whole renovation project just go away?
I could recommend a couple startups for that as well. Yeah. But this one helps you visualize it. And what they say, this is going to be their wedge into becoming the Amazon for construction. So
I love it. I'll be downloading the app right now. So the fundraising has already gone to good use. Here's a customer acquisition story right here live on Quick Takes.
I don't know how expensive your innovation is going to be because, and if it's going to be material, because they've already grown to 72 million in annualized GMV. So that's like a 22x over the last year.
I'm going to be like a fly on the back of CostCertified here. But look, hey, if this can be like one of those situations where the venture capitalists fund the users through Uber or through Airbnbs for some time, I'd be happy for me to get some discount on my renos through CostCertified. Courtesy of who was it who was participating in the raise?
Fuse.
Thank you, Fuse. I appreciate it. Which shows some growth. So
let's talk about Fuse. Fuse is a relatively new VC fund based in Seattle, and they've been very active in the Canadian West Coast. I think they're in Cement.
Another Calgary deal.
Yeah, and they led the Visual Ping A round. So
great.
Very active. Someone else to put on your radar if you live in Alberta or West Coast. Love the ambition of CostCertified. Not every day a company comes out and say we're going to be Amazon of a new vertical and seem to have credibility towards doing it so early. So this is ambitious company. It's based in Alberta, where we've seen quite a few big companies emerge recently. They have momentum and a lot of money to go pursue it right now.
That's exciting. I love it. We're going to be keeping tabs on CostCertified. And last up in our lightning round, Alida is alive with a new raise. What do you mean they're alive, Alex?
So Alida was originally born in 2000 in Vancouver as Vision Critical. It was a darling of the tech community, and then sort of fell on the wayside. Um, they now have raised 20. They renamed themselves, moved to Toronto. I guess new management team, and they've now raised a 20 million Series D as Alida from round 13 growth fund.
And why are you still interested in the artist formerly known as Vision Critical?
Well, it's not often you see a phoenix rise from the ashes, and so it's pretty exciting to see that there's a company that was, well funded for the time, not for today, that had a lot of buzz, completely reinvent itself, raise money, and again, round 13 growth fund usually means the company plans on going public in the next couple of years.
Yeah.
So it shows the tenacity, and it was interesting though the moves they had to do. Like they felt they had to move coasts, they had to refresh the management team and get a refresh focus. So I found this very interesting story and a bit unusual. We don't talk about rebirths.
Yeah, I think this is exciting. I mean, also in the TechTO school of thought, we want more cockroaches. And if you're alive, you said it was founded in 2000.
Yeah,
you're entering year 21 of your startup. I think you're in good position to remain around for another 21 years. So we just have to see how they're going to able to navigate this new brand, this new city, and hopefully all new products and go to market. Very cool. Thanks, Alex. Wow, what a week in Canadian tech. If you haven't already, you got to like and subscribe to TechTO wherever you're watching or listening, and we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.